A trader's story, starting as a runner right after the life exchange goes electronic. His journey to becoming an oil and gas trader. Why, after years of being a scalper, he decided to become a global macro trader. His process for trading global macro themes. And the top themes that this trader is seeing right now. All this today and more on the Futures Radio Show podcast with owner of Priapus IQ, Ryan Paisey. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio Show podcast on iTunes, YouTube, Google Podcasts, Spotify, or Stitcher. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. We had such a fun conversation when we were on with Chris Weston and the Pepperstone webinar that you and I did, and we had such a blast talking. So I was like, we got to have you on the show and learn a little bit more about you, because when I was hearing you talk a little bit about your backstory, it was actually very similar to mine. You started on the floors, didn't you? Yeah.
Yeah. Well, technically I started just after the live floor, so the pit trading. I started just after that, but that was when all the pit traders had just moved to the fresh, moved onto the screen, so moved onto the fresh electronic trading floor, as it were. So it was we still had like the hangover from the floor in terms of a runner was still a runner, there to be used and abused, no HR or nothing like that. And then I did do a small amount of time on the IP floor just when that was transitioning over as well. But there was a lot of similarities just in terms of like the mindset, the people around when you begin.
And what's cool about that is that you were actually there at the time of the turn, so you didn't have that baggage of.
Well, this is exactly it, and so many people did, and you could see it, especially like that first year or two. There was so much baggage, and people it's difficult to use the phrase "found out," but a lot of people did. They were found out. They were making money on the floor because they might have known someone or where they were stood. But when we go to screens, it's you don't know who you stood next to.
Yeah, and and traders, we're a finicky bunch of people, aren't we? And we don't like change. I know I don't. I mean, I wore the same pair of gym shoes, a pair of black gym shoes. I was in a real long downturn that was driving me crazy. I remember I bought these pair of Nike black running shoes. I went in and I turned it around on that day, the first day I wore them. I think I wore them for like a year and a half straight. I was going to wear them until they fell off my feet.
We're going to say you wore them to bed.
I'll never forget. It was a pair of black Nike Air Max shoes, and I literally kept trying to buy more of them online, and they were sold out. I was going, I will pay what. Listen, I'm like, you don't understand. Tell me how much. I'll pay for them.
Well,
Make me a pair.
People say about like sportsmen and they say like they're superstitious and stuff. I'm like, you do not know the traders I know. They make you got superstition in sports and you got superstition in traders. Like, I know traders that have had like the same snotty tissue on their desk for like 2-3 years because they've had their best day the first day it was there.
Don't move it.
Exactly. If they came in one day and the cleaners had moved it, God, it would there'd be murders.
So when you were starting on the life floor, what markets were you trading, or what were you doing?
So it was just after the live floor had closed, and it was I was a runner for a company called Kite Group, basically their first office after the live floor. So literally just about a year after they all finally moved up. So basically back then it was the role was I think the role officially was trading assistant, and it was basically what on the floor would be classed as a yellow jacket, so a runner. And back then, even though we were on the screens, so the traders were on screens, a lot of traders still used like cards between them and the risk room, and also the broker would, there was a broker, a guy called Joe Moore, who was actually still around. He's still broking. He would be sat at the back of the office, and people would still shout over orders to him. So it had a floor vibe, but obviously 99.9% of the execution was now on screens, which, as we just said, a lot of people didn't really cope very well with. But back then, like when I say I was the tea boy, I would genuinely, one of my main jobs in the morning would be to make sure all the traders had their tea and coffee waiting for them, basically. And you would get showered with abuse daily. Even you didn't have to do anything wrong or anything. It was like, it was just like the old life floor, and I'm sure like the CME and that is, the young, the new, they got to get they got to be proven. They need to be vetted by fire, as it were.
Yeah, I wish that people could even understand what that was like, because there's so many people now, obviously with COVID, I mean, there's nobody even in human contact, let alone being on a trading floor. But just learning by watching the best people in the industry do it, and from a position of where you don't have to trade and you're actually there to work.
This is it, Anthony. It was like, it was tough for the first year or so. Like I say, it was in the office pitch and whatnot, but it was a year of on-the-job experience, and it was like any downtime I got to like go and sit with like a couple of one of the best traders. I'm still luckily very good friends with him. He kind of took me under his wing, just constantly asking questions day in, day out. Then another year and a bit goes by, then eventually I get given a trading account 2 years in. But by that point, I'd already been watching the markets from say 6 a.m. till 6 p.m. every weekday. And and we actually, something we brushed upon when we were talking to Chris on the Pepperstone chat, is like that kind of self-imposed delay between seeing the markets and getting to trade the markets. It's definitely it's obviously missing now, and I do think people are suffering for it, because it definitely stood me in good stead, and I'm sure it stood you in good stead.
Oh yeah, I watched for 3 years and it was amazing.
Yeah.
Even though I was going through membership when they had launched the E-Minis, they wouldn't let me trade an E-Mini on the trading floor. I actually had to be a member. And I'm like, it's electronic. No one's even trading it. And I had to wait to get a seat. There was literally a wait list because there was no available seats. And eventually I got it. And even with the 3 years that I waited from when I started being a clerk and a runner to become a trader, I still wasn't nearly as prepared as I should have been. That's a whole other conversation. But I want to talk to you a little bit about the markets that you were trading. And so you got your account, you watched for a period of time. What markets then did you start to trade?
The first markets I started trading, and I was very fortunate in the fact that a guy, Paul Wise, who's like one of the guys behind Kite Group, as well as the guy called David Kite, obviously. They basically said, look, you've done your time, you've been watching all the markets, it's up to you, choose whatever market you want to trade. And it was just as the International Petroleum Exchange, which was, apart from the LME, it was like the second from last pit to go, which is obviously the oil exchange, which was then bought. It was just bought out by ICE back when ICE only had the IPE, and they just converted it to electronic trading. And we just had all the IPE guys, and the IPE traders, the oil traders. If you fought the life guys, like the London, the Life London Futures Exchange, if you thought they were a rough and ready bunch, the IPE guys were just a complete different breed. We are talking, some of them lovely blokes, some of them absolute knuckle draggers. It was a sight. So a lot of them had come to Kite. Well, a good handful of them had come to Kite as I was given my trading account, and I'd spent a lot of time with them in terms of getting them used to looking at the screens, teaching them about the new trading software. Back then everyone was using TT, Trading Technologies, and it was kind of, I'd spent a lot of time with them, got very friendly with them. So when it came to deciding what market to trade, bearing in mind I've always had a massive love for geopolitics and just the way the world works as well. For me, oil trading, like choosing the oil markets, was a no-brainer. Because I've got friends that traded gilts and your Sturs, your Euribor, your short sterlings, and all that, Eurodollars. But for me, I never really had an affinity with it. It was obviously trying to know your monetary policy and all stuff like that. which has never really been my bag. Whereas the geopolitics side of it is something that has always came quite natural to me. I can kind of put the pieces together, and it helps. You know what it's like, Anthony. It's like if you love if you love or what you're very interested in what you're trading, it becomes a lot easier. So I chose the oil markets back then, basically just trading Brent on what was IPs on, now on ICE, trading that versus CME WTI. So what's still called the ARB now. So that was trading the ARB was pretty much the first spell, and then I started moving into the calendar spreads on the oil markets, then moving into the crack spreads, which is gas oil versus Brent. Obviously, there's loads of different types of crack spreads, but the crack spread that I kind of specialised in was ICE Brent versus ICE gas oil, 4x3. And then from there, kind of grew and grew and grew. Touch a bit late now, but thankfully kind of became very good at it. Few years kind of go by trading that, and I actually then moved into trading the Henry Hub, also on ICE, because ICE had like this. It was almost like a OTC contract, but it was a screen traded OTC contract. It was very bizarre. It was like a hybrid of the two, to the extent where you could, whilst you were trading, you could actually talk to the people on web ICE, like your counterparty, and that was an experience trading that. It was something that I really enjoyed, and it was something that fortunately I became very good at. I think that there was a stat at one point where I was London's largest proprietary trader in that contract, but I think probably a lot of that was to do with the fact that it was probably only about 4 of us trading it. But you know what? Jeff Sprecher came over from the US, from Atlanta, where they were based at the time. He came over, bought me dinner, so I'll take it. So oil markets have always been always were a passion of mine, and it's some of the best days of my life. That's kind of how I started. That's my markets that kind of got me going, shall we say.
Yeah, and you nailed it when you said that you found a market that really fit your personality. Resonated with you, because I started in the Eurodollar options, and I was looking around going, man, I can't be in here. And I mean, that's where I started as a clerk, and then I went into the S&P, and then once I got into the S&P pit, I couldn't wait to become a member. I saved every single dollar and everything I could, and I couldn't wait to be of age so I could go through membership, because I've said this so many times. It's not about your strategy. I mean, once people get involved in trading, you either love it or you hate it right away. And there's I don't think there's a middle ground for it, but
no, absolutely.
And then once you find your market, the strategy itself, I mean, it doesn't really matter, because if you love what you're doing, you're going to find a way to make it work.
This is exactly it. And this is like some people, you kind of try and tell people, like you said yourself, it's like, it's okay. You want to be a trader. Yeah, fine. But there's a million different contracts that you can trade, and they've all got their own personality, and you need to find something that suits you. It's like, I couldn't trade stirs, and I've got some very close friends that will only ever trade stirs, like short-term interest rate products. I'm sure everyone knows, but just in case anyone didn't, I know it's a cliche and whatnot, but it's horses for courses. Some of us do well in certain markets, some of us do well in other markets. But you have to have the passion. And if you're looking at a contract wishing, like you were doing in Eurodollar P, you wished you were somewhere else. Well, if they forced you that and said, someone said, like, you have to trade Eurodollars, you'd never done very well with it.
Never.
And you would have probably given it up. But I think, and that's what half the battle is. I think it's finding markets that you're comfortable with, but more importantly, finding markets that you have an affinity with, have a resonance with, because just by having that affinity with the market, just by enjoying being around that market, whether you like it or not, you're going to take in so much more information, and you're going to, it won't be a job for you. It will be a passion.
Yes.
And that's what trading is at the end of the day. It's Yeah, well, in my opinion, I know you'll get some quants that just rattle off numbers and whatnot, but that's kind of not my bag at all. So
Yeah.
I can't speak for them.
Yeah, I agree. I mean, it's like, and I talk with a lot of quants, and for them, it just comes down to the numbers, right? I mean,
Yes, yeah.
but their passion is numbers. So when you
Well,
talk to them,
yeah, there you go.
that's how they think.
Yeah, that exactly. That, do you know what? That's perfect. Yeah, you say, well, they're not passionate about the market. Well, they are. They're passionate about the numbers that the markets generate.
Yes.
Yeah, so that'll do.
Yeah, I mean, and then that's not me. I'm somebody I'm a discretionary day trader who I just love markets. I love everything about waking up every day and going through my process and my prep,
Yeah,
and even these days lately over the last few weeks, I've been doing a lot more watching, just because it's slower, but I still love the whole process. So
you're sitting on your hands, but you're still loving sitting on your hands.
Yeah, and that took a while for me to embrace that because I don't like sitting on my hands.
Yeah.
But with age and experience, you kind of figure out that it's a little bit cheaper.
Yeah. So sorry, saying you love sitting on your hands is probably the wrong way to say it, but you love still watching the markets, whether or not you're trading.
Yeah. So let's talk a little bit about your process. You found a market that you really liked. It resonated with you.
Yeah.
How did you go about? Because I know that I believe that you're definitely more, like you said, the global macro kind of thinking.
Yeah. So that was that. So how I started was obviously doing the oil trading, and my process of trading changed completely. I went from scalping intraday, for years, then trading calendar spreads, and the process would always be, obviously processes evolve. To begin with, probably not much of a process. Just kind of come in and wing it. Yeah, as many of us do when we first start, which is kind of why I now try and help people by saying that you do need a process from the start, and because it will really set you off. But over the years, so my process then evolved into taking more of forcing myself to step back and try and take in more. It's an overused term again, but like the macro themes, just try and, this whole, have some kind of wide angle lens in front of me rather than being too particular on the market. So I'll build up. I won't have like a daily process. I'll try and it'll take me weeks to build up pictures, and pretty much it's just full immersion in, whatever's going on in the world. Try and really drill down and research as much as possible, and constantly checking, what the sentiment is, because I do think sentiment's a big part. And if I can find some kind of gap where maybe the sentiment isn't currently where I believe it should be, that'll be then whatever product that is. I won't go in looking at a specific product. I'll let the kind of sentiment tell me what products might be open to having more value taken out of them. Just because I think, if I've gone from focusing on a certain number of contracts, or like say 3 or 4, and I find that very limiting. So now, because I'm looking at global pictures all over the shop, I can't then just try and say something's going on. I don't say something's going on with China buying corn or whatever, because at the moment, their chicken production's going through the roof, so they're going to need feed crop. Well, if I was only fixated on trading the NASDAQ, crude and gold, there's no trade. And I might try and force myself into putting a trade on, using those products. Whereas now, because I allow myself to trade any product that I want, I can now find the product that suits the theme that I'm building up. So it's difficult to say that I've got a rigid process, because I haven't, and I never really have. But it's one of basically complete immersion in as much of all topics, basically as much as what's going on as possible, and then trying to eke out where would be the best trade to put on, given basically every product I've got in front of me. But that's what I've started doing a little while ago, and it's really working for me because it frees up my mind so much. But I must stress as well, like recently I've really reined back my trading, and like focused on launching my business Priapus, which is kind of where everything's going at the moment.
Well, we're going to get into a little bit more about what you're doing with Priapus in a moment, but I want to
Yeah,
talk about, you said something that I really focus on, and that's a theme. But we do it so
yeah,
differently. And this is what's
yeah,
interesting is that for me, I only trade the S&P, the Russell, and I trade the 10-year ultras. I look for the themes that are impacting them. So I do it from
yeah,
from a different place. So I say, okay, what's impacting the S&P right now? What's impacting the 10-year? And the obvious answer is the Fed, right? So you and I
yeah,
actually talked
exactly.
about this in the webinar, and
Yes, yeah,
there was several people that had come on the podcast from. There's a whole list of people I could name off that were really talking to me more and more about. They're like, you don't understand how much the Fed is doing right now. This is like QE 1, 2, and 3 all within a
yeah,
month, and I'm sitting there going,
yeah, yeah,
okay. So what you're saying to me is that don't be short,
yeah,
right? And I'm
yeah.
just
This is
thinking
it.
about this, and so I find the theme that works for the market
Yeah,
that's impacting the market I'm trading. You go about it another way, and see, for me, my brain doesn't work that way. That's very difficult. Talk to us about like how you sit back and go, because there's so many themes out there, Ryan. Right? I mean,
yeah.
there
I like
really
there was.
is.
It's obviously it doesn't help that I really am appalling at the best of times at explaining myself. But I will sit here at my desk for 15 hours a day. I've got the Squawk going, I've got Twitter going, I've got Reuters going. I've got all the feeds coming in, and on top of that, I'm reading as much. I've got like all the geopolitics, all the geopolitical kind of reporters that I follow coming in, but also, there's lots of really good premium news providers and stuff like Stratfor and whatnot, which are and foreign policy and whatnot. Basically, like I say, it's it's not something that you can kind of come in one day and build up a picture. Like what I'm building up it's basically I've been doing it for the last 3 or 4 years, and I'm constantly just adding bits daily to what I already know, if that makes sense. So I'm I'm not coming in and trying to learn, okay, what's going on. I'm not coming in and learning about the trade deal now. I've already got a really good picture of what's going on in the trade deal, like the US-China trade agreement, sorry, or lack of, shall we say. Um, but it's like every day, it's just basically, like I say, it's just full immersion. And I know people, like I've had people sit with me that have tried to do the same, and they can't. They It's the ability to unfocus, basically, if that makes sense. I won't focus on something too particular in too great a detail, and I do think that's where a lot of people go wrong if they try and do this kind of method of doing things. It's basically just trying to take in as much as possible from as many different sources, just to allow yourself to build up the picture. Like I say, I'm very bad at explaining myself.
No, but I understand it. So let me think about this the way that you're saying it to me. So basically, like for myself, because that's the only thing I could really compare this to is like for me over the years, I'll build up, let's call it, my playbook of the technicals and the things that I'm using, and you're always constantly tweaking them, and it's just like some things that I'll see happening in my strategy only I really know. I can't really explain them to everybody, but I'm like, okay, the
Yes.
way this is reacting, this makes sense to me. So I'm a little bit more technical based in my thinking with a supportive theme
Yeah.
or a theme that contradicts it, and I'll execute accordingly. You're building it up with the whole macro theme, and you're like, oh, I see this is now impacting that, and oh, now this is coming
Yes.
into
Yeah.
play. Yeah.
It's all about like like secondary and tertiary like causation of what is going on. Like so that was a great kind of analogy with like talking about technicals. Like you come in and you see, I don't know, a moving average is above so and so, and the two moving averages are across, but the MACD line is whatever. Yeah, you might
Yes.
come in, if you hadn't seen anything before, you say, okay, well that's you quickly scroll through your book and you say, oh, well, that's a definite buy signal. But you've been building up how your particular markets behave in certain conditions with those kind of ideas lined up. You might say, well, actually, that would normally be a buy, but I know from experience, God knows how many years I've been trading the Russell, that I also need to wait for maybe the RSI to kick in, or it's just building up that picture in your mind. And like for me, like you say, it's very similar, except for I'm constantly adding layers to kind of what I know is going on in the world, and then kind of then kind of drilling down through it and say, well, okay, well that'll impact. So at the moment we know the flooding in China. Well, we know. So first off, we know we got African swine flu. It destroyed a lot of the pig head of pigs in China. That collapsed. They were looking for new protein, so that's one of the reasons why they were buying a lot of soy. That obviously trade agreement kind of went a bit peak-tong. China then started buying more soy from Brazil, South America, which worked out fine. But because the swine herd collapsed, the chicken breeders have really started pumping out. This is something that I've been following for quite a while, and it's only been the last week that we've seen it in the media, with South China Post and etc. started putting out reports saying, oh my God, the chicken population in China is now huge. It's now being a drain on the crops, because what do you feed chickens? You feed them grain like corn and soybeans. So that was something I already had in my mind, because I knew that this is where it was going. And how did I know that? It's purely from constantly reading, okay, well, what if they're not breeding pigs anymore, because they're using all their pigs, where else will the Chinese get their protein from? Well, it's going to be chickens, because, having read into how their food supply works, that's what I came up with. And it's just all these things kind of, at the time, it's not like I was buying corn way back 6 months ago, but it was something that as corn was coming off recently, and also then look at the weather that's going on in China, where, they've got awful flooding going on. You kind of think, well, okay, well, the grain crops that they're producing to feed this new chicken population, basically, and also just grain for themselves, that a lot of that's going to be taken out of the system. Okay, they're buying from Brazil, but Brazil is also having issues with their export of crops due to COVID, but also due to now recently protests on some of the main highways going from the areas like the interior where the crops are grown to the river ports that then export it out to the oceans. So, okay, well, China, that means that they're going to have to go back and buy more corn from the US. And this was something that I said to my subscribers. I've been thinking, obviously, for a long time, put it out on the newsletter last week. Actually, it was last Tuesday, because it was the day after the big Iowa storms, because it was the Iowa storms that kicked in. And I thought, well, hang on, I've already got a sneaky suspicion that China are going to have to purchase a shitload more corn from the US. But now the US supply could be taking a bit of a knock due to this Iowa storm, not just for the crops that's been damaged, but the infrastructure, like we saw those pictures of the big grain bins being caved in. So the next day on my morning newsletter, I said, look, guys, these are the reasons why I'm long corn. I really like it. It's everything ranging from weather in Iowa to loads of eggs loads of chicks being born in China. And and thankfully it's been a good trade. And what was even more pleasing, and this is kind of what, for me, possibly I prefer like just this than actually making money on the trade, is the fact that everything that I'd been building up in my head then came to light through media. And I had a couple of like the people that, my subscribers come back to me and say, oh, great, like, they didn't put the trade on, but it's great for them to see that at least my way of thinking is how things are playing out in the real world, which is kind of, when that's happening, you're doing something right.
Traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. I love this, because going back to trading has to be a passion, right? Because you see an article or something comes out across the newswire months before this even sets up, and you say, okay, this is happening. Keep an eye on it. Look at corn, not reacting.
That's it.
right?
Exactly. I did not react at all to it, but it was just something I stored in my mind and think, okay, well, yeah, if they're doing that, that means they might have to start doing that, and that's all it is. But yeah, for me, like you say, I'm a bit of a nerd when it comes to this, but for me, I love doing that.
And you have to really, I think what I take from this the most is that you embrace that that's your strength, and you're not really trying to, force your way to make money in a different way. If it takes this long to set up, then that's what it takes. You're just going to keep doing what you do, and then all of a sudden it's like, here's my trade. It's forcing you in.
Yes, exactly, and which is completely different from from how I used to trade. And I find it so rewarding when it does all come together. But more importantly, it's just I find for me, it suits my kind of new, my outlook on life is now kind of much more laid back than it used to be. I used to, the heady days of trading a lot when I was a lot younger. I used to be a bit of a party animal and whatnot, and it wasn't the healthiest of lifestyles. But yeah, so now I'm kind of settled down a bit, much more chilled. I'm now also, trying to help a lot more people. I don't care if people know what I'm thinking because I'm not scalping them, because I'm not doing kind of very short-termist stuff. The size is there for everyone to do the same trade I'm doing, which it takes a lot of the pressure off. It makes them far more enjoyable and more rewarding. It's just for me, I find it a much more laid-back approach. And at the end of the day, it makes me happier, which is all you can ask for in life, really.
Yeah, I mean, it's trading is a journey of oneself. I say this in all my shows. It's on my Twitter page, but it's one of those things where I'm not the same type of trader I was, when I first started in the first decade versus the second decade. I'm just you evolve as a person. Markets change
completely,
and you have to continually see. I think with age, this experience to where now you don't need to trade as often, but when you do trade, you have a stronger hand in the market.
Yes, yeah, exactly. I feel more comfortable in any trade I put on. And I also, I think like we've mentioned before. I think we mentioned this when we were talking to Chris. I've now accepted. It's just, a lot of it's just acceptance in what kind of person you are, what kind of trader you are. Acceptance in, the markets will be there tomorrow. It's accepting you will have losing trades. All these things do get easier when you get older and more experienced at trading. Okay, I know I'm only nearly 37. I've been in the markets for like 20 years, and it's taken me a lot longer than it should have to be accepting of who I am and what I want out of the markets. And like I say, so now I very rarely trade, and when I do, it's a lot smaller than it used to be. And that's why also, one of the reasons why I am, starting to do things other than trading. Understand that you don't have to trade every day. Understand there is a lot more time.
It's just the hardest thing, when you're younger or you're newer to trading. I mean, younger and newer to trading are like the two things where, you want results every day right away. You feel that this is just, you're looking at the screen, so therefore you should have a result, and
this is it.
And they don't realize that the result that you're actually getting is experience and time, to the point to where when things are set up and you are mentally in a good place and you are, have the right amount of capital in your account, and you have seen some things happen in the past that maybe are similar to now, that you take advantage of them. I remember when I was in the pit and I was trading on the screen, looking down into the pit, and I remember 2000, 2001, and I remember so many people were doing so well, and I'm like, here's me. I was just about my third year in, and I'm sitting here going, all these guys are taking advantage of these volatile markets, and this is kind of new to me. So, I come out of the bull market and then the break, and just the point of the story is that they were there long enough to now, when they saw something that had happened in the past, and obviously it's always different, but it's similar to the reactions, they were making a lot more money because they had put their time in to get to that point.
Yes.
So when 2007 and 8 came along, that's when I really kind of made my mark as a trader, because I was now a veteran and I'm going, I've seen this movie before, and
this is it. Exactly.
And it might take you a decade, but if you could stay in the business long enough,
this is exactly. It's capital preservation, like buying yourself time to be around for longer. Yeah, because this is one of those industries where you do get bonuses for time served. If you've experienced enough, it does. You do build up like a back catalogue of experiences that you can rely upon, and I think that it's one of the reasons that, and this is something else we've spoken about before. It's one of the reasons why I do think too many people get too hyped up about trading, and they want to trade straight away. And people, and when they do start trading, they want to trade too much. It's very easy to forget when you first start. You're a trader to make money. You're not a trader to generate commissions for your broker. It's the whole, like the adage, like, less is more, and sometimes it really is. Obviously, you need to be able to turn it on at a moment's notice, or like as soon as a headline drops, you need to be able to turn it on. But in the meantime, that it doesn't matter if there's a lot of time sitting around. You can go years without really moving mountains, but during that time you've been learning. So like you said, and when 2007, 2008 turned up, there you were, sitting pretty.
Yeah, I mean, it was in the right mindset, had the capital, and when the headlines were hitting, very similar to what I saw in 2000 and 2001, and there was just a lot going on back then, I was recognizing the action in the market, and I had now been through a time where I didn't take advantage of it to where I then took advantage of it. And, that brings me to kind of where we are right now. So you've got a lot of experience. Let's talk a little bit about what we're seeing right now in markets, because let's face it, this is all new to us. It's always all new, but this is even something that's when I look at the way that the S&P has traded this year, it's pretty unbelievable, right? I mean, we had all-time highs to a huge break to then all-time highs in the shortest amount of time that anyone has ever seen. And from here going forward, and we don't have to talk about equities because there's just a lot going on. There's gold, there's things happening in all sorts of different markets. I mean, look at crude this year. I mean,
this is what I mean.
So what is it that you're seeing? So let's get into into Ryan's, global macro brain a little bit. And what stories have been building up for you that you're looking at, the trades that haven't set up yet, but you're kind of storing them and waiting to see what comes next?
To me, the obvious trade, or one of the obvious trades, is rates continuing, like US rates continuing to go lower. Obviously, they've been coming off quite severely for a long time. Trend is your friend with rates. August, we've seen a big old rally in the back end, which I think is overcooked. I'm already short rates. The average is I'm already short the back end from about yields terms from about here. I do think it's lower forever is something that we've got to start thinking about. I know people start seeing these inflation numbers that we've seen recently and say, oh yeah, it's a sign that the cash has gone through and inflation's going to spike. I really don't see that. We saw 30-year bond yields, bond auction this morning, yielding negative. I think it's only a matter of time before the long end of the US rate curve gets battered down. I think 30 years under kind of 0.8 in the next month or two should be, well, not nailed on, but I think it should be there. Also with that, I think gold has got a long way to go. But then in terms of a macro theme, I'm starting to become quite a firm believer in the whole commodity super cycle idea. I really am starting to believe the hype that not just your precious metals, but all commodities could start seeing some quite significant upside. Obviously, then you've got the argument, okay, well, that obviously involves inflation, which it does, but the markets are now so disconnected so disconnected that I believe we could see lots of commodity inflation, but bond yields still pinned to the ground. So that's the commodity side of things, which the more I hear on that, the more I'm a believer in that. I'm also a big old believer in sterling. That was something we mentioned a month or two ago. I think that was when it was trading like 127, what we now 130, 160. I still think cable can go a lot higher. I'm a big believer in the pound. But the whole Brexit thing, Brexit's been going on for 17 years. Sorry, since 2016. I've not had a holiday since the start of Brexit, purely on the belief that if I did go on holiday, something would happen. And the can keeps on getting kicked, which means Ryan is not booking a holiday, and that is starting to really wind me up. So that should be coming to a head in September, and I believe there's going to be a deal that's going to be done on that. So we'll see a rally in sterling on the back of that. What else am I looking at? What else do I think? Basically, primarily, I think that's for the moment. I'm commodity baskets, get long them. Commodity like super cycles upon us. Rates lower for longer, lower forever, and unfortunately, when it comes to equities, I just can't see. I can't see a way how tech stocks do not carry on going higher. I know it's the. Do you know what I mean? I feel dirty saying it because I'm looking at the chart now for the Nasdaq going back to middle of 2019. It grind higher, Q4 2019 grind all the way up. New highs start of Q1 2020, collapse on COVID as it should do, as it expect, and now, we've gone from sub what was the low down there? Nearly like seven in the Nasdaq, like 7,300. No, sorry, got down to like 6,600 or something like that.
Yeah, it broke 7,000. I don't know what the low was.
Yeah, so we got close to 6,000, and we're now close to 12,000. Right, that is just bonkers. But when, like you say, when you speak to all the people on your great podcasts and whatnot, everyone's telling you the same thing. The money going into the system is mind melting. The sums the zeros we are talking about, and obviously money's fungible. It will find its place, where it can yield the most. And with yields so low, is it any wonder that more money's going into your blue chips? And also, let's be honest, during COVID and whatnot, during all these lockdowns, everyone's still using Amazon, everyone's still using Facebook, everyone's still using Google and Apple and all. So it makes sense that your tech stocks are going to carry on outperforming. I am short the Russell on basically a long-term spread, short, broad-based, long technical. So I'm long Nasdaq, short Russell. That's touch wood, doing very well. I can't see myself getting out of that for the foreseeable. I've jokingly said to a couple of the guys on my newsletter that this could be a trade that I'm in for the next 2-3 years. Because it's one of those. Until someone gives me a good reason why tech shouldn't carry on going higher, I stay long. And I've not heard anything close to a reasonable explanation as to why tech stocks could get sold off. And I don't believe for a second the argument that it's gone up for so long it needs to come off. It doesn't.
Yeah, that's the worst argument of all.
I hate that.
Yeah,
I hate that.
That tells me to buy more when people say that.
This is it.
Yeah,
it's like it's the same. And on things on the downside. Any trader or anyone claiming to be a trader that tells you the market's going to come off because it's been going up for too long, or it's got to bounce because it's been coming off for too long. Just mute them, block them, do whatever you can, because they have no idea of how markets work. That's a lazy reason for a trade. Let's be honest, it's no reason for a trade.
It's no reason.
So it's very boring. I know everyone's saying lots. Also, what I will say as well about the dollar, Forex trading is very much something that I'm appalling at. I try, bless me, I do try, but I really struggle with that. I do think the dollar is probably going to strengthen from here, but that's a very loosely held kind of idea, purely because of how bad I've been calling it recently.
So
know your limits. Limits. That's what I say.
I'm not a currency trader myself, and it's funny. I do occasionally do some swing positions either in dollar or gold, and I actually talked about a swing position I was going to do in gold last week, and literally the minute I started putting bids in, the thing just gets away from me. It's funny with gold, either it fills me and it's immediately against me, or I try to get in and it goes immediately away and I don't get in. It's pretty hilarious. It's got my number.
One of those where it's one of those where if you get filled, you don't want them.
I know, the minute I'm getting in, I'm going, oh man, they're going to get me out already. But one thing I want to talk about before we get into rapid fire is the Russell, because, I look at it like this, and I understand the hedge between the NASDAQ and the Russell. I totally get that. And there's one thing that when I look at the markets as a whole, and there's one thing that you go back to when I said, experience and seeing things in the past. I think that we're in such a time where when everything starts doing good like this, that part of my thinking is I watch the Russell a lot. And I know on the weekdays, I like to really just stay short it because I know that there's net sellers there. But the days that it's leading, it always outperforms everybody. So I like to trade it long. So it's really one of those things where when it's spreading against the NASDAQ or the S&P on those days, I think it's a really good intraday trade. But overall, one thing I'm very conscious of that I've seen in the past is when we get into these types of moves, the Russell, because it's been so weak, all of a sudden becomes the cheaper one and people buy it. I'm just curious, what's your reasoning for wanting to be short? Why are you choosing the Russell? Obviously, the charts will tell anybody that it's the laggard to the upside, but what's the macro reasons behind it?
Well, for me, and this is very much kind of working man's kind of macro. It's kind of there's no bells and whistles on it. It's purely out of the contracts that I've got at my disposal. I think it's more of a picture on the broad-based economy in terms of, it's not, just the way the makeup of it is very much more kind of, your overall US economy rather than, your tech-heavy NASDAQ. It's if I boil it right down, it's almost like I'm saying, right, I want to be short High Street, or as you guys would say, Main Street, and long internet shopping, basically. Obviously, there's more to it than that, but in terms of really layman's terms, I want to be short, smaller companies that very small employee numbers, your small towns, just middle America, if you want. I don't know if that's the right term, but that's what it sounds like for a Londoner like me. It feels like middle America might be the right term. But against that, I think the way the tech sector is going, we're talking, what Amazon was it Amazon today? I think it was Amazon today hit $2 trillion.
Apple.
Yeah. Apple hit $2 trillion. These companies, they just hoover up anyone beneath them that they feel that they can take on. So why get in the way?
I mean, that's a great explanation, and it's what I kind of thought. And it makes sense definitely on the spread side because I've seen that spread continue to work, and it's just one of those things where I was just curious because you looking at the macro side of things, what the reasoning was. And I totally get that. And that's why I think, going back to the day trader and me a lot, that's why I like that when I see those spread days, when the Russell's down and the NASDAQ is up, to me, it's not to buy the Russell against the NASDAQ strength. It's like you sell. That's what I was trying to get at. But the days that it's up, I feel like it does play this catch up. And I'm wondering if it, does that spread eventually shrink? But, that's for a different day in conversation. But really just such a fun conversation. But we are not done yet. I have some rapid fire questions next if you're ready for those.
Yeah, let's go. Let's do it.
Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. All right, Ryan, first question for you. What traders influenced your life the most and why?
So that would be my good friend Adam Nash, who was one of the pit traders on the live floor, who then I became one of his runners when he moved onto screens. And the reason why is just because he is the most laid back guy, a very successful trader. You would have no idea what he did for a living by knowing him or by seeing him. Just incredibly laid back, handles himself so well. Up days, down days, it doesn't matter to him. It's all about the long journey, and also just what he's always been there for me. He's always imparted wisdom onto me. So he's definitely had the biggest influence on not just my trading career, but possibly my life, really.
What was one of the hardest things for you to overcome in trading?
Looking long term, taking my eyes off the tick in front of me, the uptick or the bid or the offer. That's, look long term, see more.
How has your trading process evolved over the years?
It's completely changed, gone from scalping every tick in the energy markets to now, as we said before, building up themes to where the world is heading, and then trying to fit that into what provides me the most value to fit those themes.
What is one attribute that you believe every trader should have?
Discipline is the obvious answer that everyone uses, but acceptance. You need to accept yourself for who you are, your abilities, and just be truthful to yourself.
Favorite book about trading?
Market Wizards. It's like your first girlfriend. It might not be the hottest bird you've ever been with, but it's the one you remember.
If you had to pick a profession other than trading, what would it be?
Well, I nearly joined the RAF instead of joining the floor, possibly a similar outcome. But now, if I could choose something outdoors, I'd quite like to be maybe a gamekeeper on a huge estate in Scotland, or possibly a stripper.
What's the best piece of advice you received about trading?
Capital preservation. Have enough capital so you can be to fight another day, basically. The longer you're in the game, the more chances you have at winning.
If you could give a piece of advice to the younger you about trading, what would it be?
Don't believe the hype. Be that the hype of yourself when you're doing very well, or the hype of others.
If you had an elevator pitch me your edge in trading, what would you say?
Well, considering I don't really do so much trading anymore, I'm all about the service and whatnot I provide. It would be sign up to what I've got to tell you. Listen to me. Follow me if you want to live.
Favorite thing to do when you're not watching the markets?
Used to be fishing. I used to love fishing. Now, unfortunately, I don't get anywhere near enough time to do that. So it's the usual socializing with friends and family. Very boring, but what else have you got in life if you haven't got friends and family?
Yeah, I mean, we share a good friend, a good mate, JB, and he's like, just watch his Instagram. He's going fishing in every part of the world.
Guy. God, is he? And the fish he's catching are bigger than me.
I know.
They are huge.
I know. Where can people find you on Twitter, and give us a website to check out?
Right. So on Twitter, I am Priapus IQ. So that's PRIAPUS IQ. And on the website, it's just priapus.com. Basically, my whole raison d'etre nowadays is to provide as much information to traders as possible with zero bullshit. Just brass tacks, all filler, no killer. All killer, no filler. So that's pretty much it. Just here to try and help people cut through the crap.
And there's a ton of it out there. Love your Twitter feed.
Yeah.
Always putting some good content out there. Highly recommend people go and check out your site. Ryan, just such a fun conversation with you. It was great to get to know you a lot better. Thanks so much for sharing your story with us and just your whole process, your way of thinking. I found it really interesting. Thank you so much for joining me today on the Futures Radio Show.
Thank you very much for having me. I apologize that sometimes I do waffle on a little bit, but you got to take the rough with the smooth.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.